Okay, get this. $34.5 billion cash.
Wow.
That's what an AI startup, one you probably hadn't even heard of maybe 2 years ago, just offered Google for Chrome.
Just for the browser itself.
Just the browser.
Yeah.
And here's the kicker.
Yeah.
Google might actually, well, they might have to consider it.
Seriously?
Yeah. Welcome to this deep dive. Our mission today, really, is to unpack why this browser, this thing we all use, has suddenly become so central to what we're calling the AI wars.
Right.
And we'll also get into Bitcoin hitting, $124,000, Japan's market finally breaking through.
After decades, yeah.
And Anthropic doing something really interesting, kind of stealthy, with a government contract.
And look, we're here to help you cut through all the noise surrounding these things. We've gone through our sources, pulled out the most important bits, the key insights, so you can actually understand the crucial implications, without getting totally buried in information.
Okay, let's dive into this Chrome thing first, it feels like David facing Goliath, right?
Yeah, classic setup.
Except Goliath owns the slingshot factory, the stone quarry, and the whole battlefield. That's kind of Perplexity versus Google right now. So Perplexity, they're this AI search startup valued at only $3 billion last year. Suddenly, just this morning, bam, unsolicited all-cash offer, $34.5 billion for Google Chrome.
Not a partnership, not licensing.
Nope. They want to buy it. The browser, the one 3 billion people use every single day.
3 billion, that scale is just hard to grasp.
And here's where it gets really interesting, I think. Chrome isn't just, a way to see websites. It's basically a toll booth.
Right, controls the traffic flow.
Exactly. 8 billion searches flow through it daily. Think about that.
Yeah.
8 billion times someone could be using ChatGPT or Claude or maybe Perplexity itself.
But they're defaulted to Google search?
They're defaulted. It's right there, baked into the address bar. And you look at the economics for these other AI companies trying to compete, it's brutal. OpenAI, for instance, they're burning through like $5 billion a year just keeping ChatGPT running.
An incredible burn rate.
Meanwhile, Chrome, it's basically printing money just by existing. It kind of makes sense why Sam Altman reportedly called browser ownership the holy grail of AI distribution.
Distribution is everything.
So for Google, what's the real angle here? Is it just about this shocking pile of cash? What's the strategic play?
Well, it's actually much smarter than just the money, I think. This bid from Perplexity. It's not just cash. It's almost like Google's ultimate shield against regulators.
How so?
Because it publicly values Chrome as a standalone asset. Remember, Google is under intense pressure, especially from the DOJ, right?
The breakup talk, separating Chrome from search.
Exactly. That's the big threat. So by even just entertaining this offer, maybe publicly rejecting it while acknowledging the value, Google strategically establishes Chrome's massive standalone worth. It's a bit of a chess move, really. It shows their hand to regulators saying, look, Chrome is incredibly valuable on its own. It's a viable, independent business. It strengthens their argument against forced breakup.
That's clever.
Yeah.
So while everyone's buzzing about Perplexity's moonshot offer, Anthropic was pulling off something, arguably more impressive and definitely quieter. They just locked up the entire United States government.
Yeah, this one's fascinating. The terms are just astonishing.
What are we talking about?
Okay, get this. $1 per agency for an entire year.
$1 per
agency for a whole year. Think about the scope here. Anthropic is charging basically nothing to put Claude, their AI, into the hands of 430 federal agencies.
Wow.
That's potentially 2 million government employees. We're talking the IRS, State Department, the Pentagon civilian workforce, all getting enterprise-level AI for, less than a coffee.
Okay, so that sounds like charity. What's the catch?
It's not charity at all. It's a masterclass in strategic pricing. It's about the long game. Anthropic knows that once Claude becomes the default AI assistant for all these federal workers...
the switching costs.
Exactly. The switching costs become astronomical. Think about embedding it into workflows, training, security protocols, all built around their system. It's like, when your company finally tries to ditch Microsoft Office.
Oh, yeah. Chaos.
Total chaos. Even if people complain about the old system, changing is incredible disruptive. That's the playbook Anthropic is running. But at the highest levels of government, they're creating deep dependency.
Okay, so translating that, what are the actionable takeaways for you listening?
Well, first, any federal AI standards that come out of this deal, you can bet they'll cascade down to the private sector.
Right, setting the benchmark.
Absolutely. So if your business isn't looking at those potential standards now, you might be scrambling to comply in, say, 18 months. And second, for small businesses especially, you've got this really critical window right now to pilot Claude at these incredibly subsidized rates before the prices inevitably normalize. Use it. Test it out.
Got it. Okay, let's switch gears. Rapid fire on the markets. Things are moving fast.
Always are.
CPI came in steady, 2.7%. Markets seem to love it. S&P, Nasdaq, new records.
Yep, fresh highs.
Translation seems to be that September rate cut still looking likely.
Right.
And tech valuations just got another sugar rush. What is it, $2 trillion added to equity values just since June?
Trillion with a T. It's been a strong run.
And broadening out.
Bitcoin just smashed through $124,000, a new all-time high.
Wow.
That whole digital gold narrative, it's not just sticking, it feels like it's demolishing the skeptics right now.
Yeah.
And related to that, Bullish, this crypto exchange, kind of flew under the radar, just IPO'd, surged 84% on day one, already a $13 billion valuation.
Incredible. But, okay, my favorite story today, maybe of the week, Japan.
Ah, yes, the Nikkei.
The Nikkei index just crossed 43,000 for the first time ever. You have to understand the context here. This index crashed from around 39,000 back in 1989.
The peak of the bubble.
And it took 35 years to get back and push higher. 35 years.
Generations of traders haven't seen this.
Exactly. There are fund managers retiring now who've never seen these levels in their entire careers. And who's been buying? Warren Buffett. Quietly loading up on Japanese stocks?
When the oracle moves.
Smart money pays attention, right? Factors seem to be. Weak yen making exports boom, and corporate Japan finally embracing this radical idea called shareholder value.
Took them a while.
Just a bit. But speaking of big bets and strategic plays that maybe didn't quite work out, Tesla's dojo.
Oof, yeah. That's a tough one for them.
What actually happened there, and what's the lesson for others trying to build in this AI era?
Well, Dojo, Tesla's custom AI chip division, it's pretty much dead in the water.
Really, after all that investment?
Billions invested, years of development, and Elon Musk himself apparently called it, quote, an evolutionary dead end.
Ouch.
It's a really stark lesson, I think. It highlights that even if you have seemingly unlimited money and ambition, taking on an established ecosystem like NVIDIA's, it's incredibly difficult. You're not just competing with the chips, you're competing with their software, CUDA, the massive developer community. It's a whole package. Beating that isn't happening easily, if at all, for many.
Okay, so back to Chrome for a second. Here's a twist, maybe a contrarian take. What if this Perplexity bid isn't actually a threat to Google? What if it's a gift?
That's a really interesting way to look at it, and I think there's a lot of truth there.
Explain that.
Okay, zoom out again. Google's facing this potential breakup, right? DOJ wants Chrome split from search. That's like Google's nightmare scenario losing control of their primary distribution channel.
Their crown jewel, yeah.
Now, Perplexity, this competitor, just slapped a massive price tag on it, $34.5 billion. That's the market saying Chrome has enormous standalone value.
Right, it validates it independently.
Exactly. Google can now turn around and point to this unsolicited offer and argue, see, the market believes Chrome can thrive on its own. There's no need for a forced divestiture. And maybe even better for Google. Perplexity just laid their entire strategy bare.
Showed their hand.
Totally. And not just them. Implicitly, all AI competitors are showing just how desperately they need that browser distribution. Google can just sit back, watch, take notes, and, keep fortifying its moat.
They don't even need to accept the offer.
Not at all. They've arguably already won, strategically, just by receiving it. Sometimes the best defense isn't fighting back directly. It's letting your opponents reveal their plans while you adjust yours.
Okay, but beyond these corporate chess moves, what's the real disruption happening? Which of browsers changing?
Yeah, I think the bigger shift isn't really at the corporate level anyway. It's happening right inside your browser, or it will be soon.
Yeah.
We're moving into the age of, well, they're calling them agentic interfaces.
Agentic interfaces, what does that mean?
It means browsers that don't just passively show you websites, they actively complete tasks for you. Autonomously. Imagine just saying to your browser, book my trip to San Francisco for next week. Keep it under $600. And then you just watch. It handles the flights, checks hotel options, looks at ground transport. maybe across a dozen different websites.
Without me clicking anything?
Without you clicking anything, the browser acts as your agent.
Okay, that's a big change.
It's huge. And here's the really bold prediction floating around. By 2027, maybe even sooner, human-driven web traffic could drop below 40%.
40%, so most internet traffic will be.
Robots talking to robots,
Yeah.
AI agents transacting on your behalf.
Okay, all right, let's try and bring this all home. If you're listening, what are the crucial takeaways from everything we've discussed today? Let's say 3 key things.
Okay, 3 things. First, and maybe some people still argue about this, but the sources we're seeing suggest distribution is the only moat that truly matters in AI right now.
Not the model itself.
Not the model performance, not the training data, not even the compute power ultimately. It's distribution, how you get the AI to the user. So if you're a business leader listening, audit your distribution right now.
What should they look for?
If more than, say, 40% of your traffic, your customers, whatever, comes from a single source, especially one you don't control, you're potentially sitting on a ticking time bomb. Diversify.
Okay, takeaway number 1, distribution is king. What's second?
Second, the browser wars are definitely back, but it's a whole new game. It's not about rendering speed or features anymore.
It's about tasks.
It's about who can complete tasks autonomously. And here's the warning. If an AI agent, like the one we described, can't effectively transact or interact with your website by, let's say, 2026, you risk becoming basically invisible online.
So the advice is?
Start rebuilding for robots, not just humans. Think about APIs, structured data, how an agent can do things on your site.
Got it. Rebuild for robots.
Right.
And the third takeaway?
Third, and this is maybe the biggest picture item we are watching, what could be the greatest wealth transfer in tech history.
From where to where?
Not old money to new money or west to east necessarily. It's from companies that have historically owned attention getting eyeballs on screens,
Right.
to companies that own action,
Yeah.
the ones who control how tasks get done, how transactions happen via AI. The ultimate winners won't just be the ones with the smartest AI models. They'll be the ones who control how that AI reaches and serves the users.
Own the action, not just the attention.
Okay.
So, given all that, what's some concrete, actionable advice for someone listening right now?
Okay, practical steps. If you have any refinancing needs, mortgage, business loans, whatever, maybe consider locking that in now. This might be the last stable window before potential election volatility hits rates.
Makes sense. What else?
If you're in procurement, managing purchasing, get on negotiating your Q4 contracts immediately and try to lock in 90-day price protection if you can. Hedge against uncertainty.
Good tip. Anything on the investment side?
Well, given the market moves we discussed, if you're sitting on cash, maybe reevaluating that, 3 to 5% allocation to crypto doesn't seem quite as crazy as it might have a year ago. Just something to consider based on the trends.
Right.
But fundamentally, stepping back. This isn't just abstract theory. Look at Perplexity and Anthropic health theory. They're acting on this understanding of distribution. Tesla with Dojo, maybe learn the hard way what happens when you can't crack that ecosystem nut. So while everyone's debating, whether AI will achieve consciousness someday, the real battle, the one happening now, is for what you might call distribution consciousness.
Understanding its importance.
Understanding that controlling how AI reaches users, how it acts for them, matters more than just having the best algorithm. Perplexity gets it. Anthropic clearly gets it. The question is, do you?
A powerful question to end on. This has been The Deep Dive. We're here reminding you that in times like these, times of exponential change, maybe the biggest risk isn't moving too fast. It's actually moving too slow. Stay bold.